Hello folks, welcome back to Motivated Investing. Bitcoin and cryptocurrency prices have traded sideways this week after surging higher through early August, even as bankers predict a seismic financial shift toward crypto. The Bitcoin price has failed to find footing over $50,000 per Bitcoin, dropping back towards $45,000. The second largest cryptocurrency by value, Ethereum, which has outperformed Bitcoin over the last year, has also struggled, dropping back toward $3,000 per Ether token this week. During the 2017 crypto boom, Ethereum shot up to more than $1,400 after falling more than 90% during the eventual bust. It's just surpassed that level in January of this year. Now it's worth more than $3,200 as of his writing. Bitcoin is performing well this year, but it's up only 100%. So why is ETH up so much more than Satoshi's invention of late? You can never drill these types of prices moves down to a singular reason. So let's look at what Ethereum is and does to get a better sense of euphoria in this digital asset. Back in the 2017 crypto bubble, there were no use cases using it as a store of value on the security, the blockchain. Now there's nothing wrong with the store of value as the main selling point of something like Bitcoin. Bitcoin has the potential to become the digital version of gold, which has itself been a store of value for thousands of years, and gold has an estimated market value of around $10 trillion. Ethereum is more than a store of value. The bull market in 2017 was all about the possibilities of this technology, but there were no applications or real-world uses of cryptocurrencies. The crypto run this time has two features. The 2017 version didn't institutional adoption and actual applications. According to the Financial Times, Coinbase now has more than $122 billion in institutional capital on its platform, up from $45 billion at the end of 2020. For most of its existence, crypto has been driven by individual and retail adoption. That is changing, but it's the use cases that are likely driving Ethereum higher. Ethereum is a blockchain just like the Bitcoin, but it differs in that it is programmable. This means developers can write code, create rules, and make applications on the platform. These smart contracts can be used to validate agreements securely. You can think of the applications that can be built on Ethereum much like the apps that can be developed on Apple's App Store or Google's Android system. The biggest difference is there are no giant tech behemoths behind the scenes controlling Ethereum's network. This is what attracted so many people to crypto in the first place. It's decentralized in terms of who controls it. The general idea is you can create rules for proof of ownership and avoid scams or hacks because of the security of the blockchain. With crypto traders and investors desperately looking for direction, the chief executive of financial advisory group Becker has said he expects Ethereum to continue to outspace Bitcoin this year and has given Cardone's ADA token a September price target of $3, up 16% from its current price. Even after the major cryptocurrencies experienced an ominous collapse from their all-time highs in April, most are up by 200% to 300% or more from this point last year. Bitcoin is getting all the headlines, but there are legitimate concerns about its roller coaster nature. The difference between Ethereum and Bitcoin has caught the attention of major market players like Goldman Sachs, which recently noted to its investors that Ethereum has a good chance of surpassing the $660 billion market capitalization of Bitcoin. The Ethereum network shows more promises due to its real-world applications and ability to store value. Ethereum represents the future of programmable money and smart contracts in a way that legacy cryptocurrencies like Bitcoin cannot. And you need Ethereum to buy things on Ethereum's network. According to the Wall Street Journal, more than 7 million new accounts that hold Ethereum balances were created in the first 4 months of 2017, bringing the total up to more than 55 million, and transactions totaled $1.5 trillion in the first quarter, more than the previous 7 quarters combined. There's a lot of stuff going on behind the scenes in decentralized finance DeFi that could prove to be transformational in the years ahead, but the case most non-crypto people would be familiar with are non-fungible tokens, NFTs. Smart contracts are simply code that is sorted on the blockchain. Now, blockchains themselves are essentially worthless, but NFTs provide a unique ID for a piece of digital art that can have its own rules for transforming ownership. So you could write into a smart contract of digital piece of art being sold as an NFT that the original artist earns a certain percentage of any future sales of his or her creation. This is a huge leap forward for creators. If you are enjoying this video, please like and subscribe. The most famous example of digital artists taking advantage of this technology is People, who sold an NFT of his work for $69 million in concert with the National Basketball Association. Dapper Labs created NBA Top Shot, which essentially allows fans to collectors to buy and sell short highlights of NBA players that are sorted on the blockchain. Some of the most sought after moments have traded hands of six figures on the platform. The Kings of Leon even released their new album as an NFT, selling tokens that will give fans perks including specialty albums or front row concert seats. The hope is these smart contracts could displace or work alongside many of the tasks and services we use that are bogged down with paperwork and outdated practices. You could see a world where the sale of art, concert tickets, music rights or title, insurance and money transfers or other financial transactions are performed using smart contracts. Ethereum simplifies worldwide payments because the Ethereum network supports the development of and allowed for the creation of new applications on its infrastructure. It's potentially a more valuable resource in the long term. Ether is used to pay those transactions, as was most recently seen with the booming popularity of NFTs in the spring. The result is a much higher utilization rate of Ether with far more transactions than Bitcoin in the last 12 months. Despite the recent dip in cryptocurrencies, Ether rose nearly 1,000% over the last 12 months compared to the 300% increase for Bitcoin, where a Bitcoin is purely a token of value, a currency backed by the perceived value of those who hold Ethereum, and the ETH blockchain fuel one another. Recent upgrades to Ethereum network are helping to scale much faster and reduce cost of transactions on the network, further pushing the price of the tokens up. Instead of having a central authority that oversees how the applications on Ethereum network run and with transactions are processed, Ethereum-based apps are booming. The most common types of these apps are DeFi. These apps saw 2,000% growth in 2020 with more than $16 billion in cryptocurrency assets stored in the protocols through the end of the year. The future of ETH. Ether started 2020 at $125.63 and grew by nearly 500% by the end of the year to $729.65. In 2021, it briefly reached $4,380 but has ranged between $1,700 and $2,500 since then, sometimes jumping or dropping by as much as $1,000 in a single week. The big question is where ETH will end in 2021. Many forecasts are relatively bullish, with an average targeted price between $3,500 and $4,500 by the end of the year, and average long-term projections are as high as $11,170 by 2025. However, there are some who see it growing even faster and more substantially in that time. The future of regulation of cryptocurrency. Ethereum represents a sustainable function-oriented approach to cryptocurrency that will support the future of DeFi. But then, many people remain on the sidelines, waiting for government regulations to be implemented. While long-term cryptocurrency investors bemoan the thought of regulation limiting the freedom currently available in the market, big investors and companies see the inevitable implementation of such regulations as a source of stability that could lead the mass adoption after a chaotic few months. The Biden administration is looking at how to address the markets. A congressional committee has been launched to review digital currencies. The FDIC has asked banks to provide documentation on how they are using digital assets, and Comptroller of the Currency, Michael HSU, is reviewing all current and past guidance related to cryptocurrencies. The chairman of the U.S. Securities and Exchange Commission has gone as far as to warn bad actors the enforcement and regulations as coming. As a whole, many see these changes as good. When the markets are regulated, they become safer for everyday users. And Ethereum, with a range of decentralized apps it supports and applications it enables, can become normal. Thank you for watching. Don't forget to subscribe to the channel. See you in the next video.